It's trading week. We've got a collection of features, op-eds, and research on CoinDesk.com, as well as interviews right here on CoinDesk TV, all dedicated to the topic of trading crypto. Joining us now to discuss is Cory Klippsten, CEO of Swan Bitcoin. Cory, always a pleasure to have you on the show. So you're featured...
Trading week.
Yeah, we want to learn about trading Bitcoin.
All right.
We want to know how to earn. If you,
I'll be the counterexample, as I often am. That's fine.
Okay. All right. But Cory, you're featured in a new CoinDesk.com article about your views on dollar cost averaging. So maybe first you can explain what is the problem that traders often fall into when, they're trying to time the market or, when to get into Bitcoin.
Yeah. So first off, I just want to thank Mark because I read the piece when it came out yesterday. I thought he did a great job of laying out the case and capturing it really accurately. So good job, Mark. Got to get you on TV more often, by the way. Do some of these. But he says that Christine is better at it. So dollar cost averaging basically just means what I like to think about is like set it and forget it. So you just decide there's a certain amount of dollars that you're going to put into an asset every day or every week or every month, and you just stick with it. Traditionally, it's actually been a way to get into a position in like a bear market or get out of a position in a bull market. So it's like a limited amount of time. In the Bitcoin space, we usually just use the term to mean like an automatic recurring purchase or setting up a savings plan. And so we do that at Swan. Obviously, that was the first product we launched with, almost 3 years ago, which is just letting people set up that automatic debit from your bank account, automatically buy the Bitcoin, and then you can even have it automatically sent to self-custody or leave it with us at Swan. And that's kind of the genesis of how we got started. We care about it a lot. You asked a little bit about why should people think about doing that? It really comes down to human psychology and the fact that we animals with our lizard brains generally chase shiny objects. And so we get really scared of scary things. And so something like 95, 96% of people will actually buy high and sell low if they don't actually have a program in place. So that's kind of the main psychological benefit and the reason that it tends to work for people over time.
Yeah. So, I mean, the idea is that you're in a bear market. You can never really time the bottom. So you might as well just put in a little, here and there when you can, and then build a position over time. And we're also contending with folks who are, trading firms. You've got, Alameda Research. You've got an article that mentions jump trading as well. And it's an uneven playing field out there. And so maybe you could talk a bit about that. And you also say that you see Bitcoin as the only cryptocurrency suitable for dollar cost averaging. Why is that?
Yeah, and for that last point, in particular for sort of a long-term automatic recurring purchase plan that you don't turn off, it's really the only one that makes sense to accumulate. And that's just borne out by the numbers. We actually did the research over the summer. I think it's called Bitcoin and the one-hit wonder altcoins. You can see it on the Swan website. But we did the research, and only 3 out of 22,000 altcoins have ever had a new all-time high in Bitcoin terms 3 or more years after their first all-time high. And even those have bled out tremendously down, significantly over 50%, over 90%. Since those new all-time highs. So, you're basically just playing a trading game. It's trading week and Bitcoin is for saving and altcoins are for trading. So that's how you should think about the difference in a trading context. That's the difference between Bitcoin and altcoins. Bitcoin is your savings account for the long term, and all the cryptos are just for trading.
All right. And you see Bitcoin as the third leg of a family wealth building program, not the only thing investors should ever buy. So the first leg is traditional retirement account. Maybe you can explain.
Yeah, absolutely. Because the IRAs and the 401ks are tax advantaged, you're getting so much free money essentially upfront, just granted to you by the system the way it is. Or with the 401k, if your company matches, you definitely want to max out at least the amount that they'll match you 1-for-1, or maybe, if they're matching 50% or something, you want to take advantage of that free money essentially. And then, I think, again, partially because of our psychology, you can use those rent versus buy calculators all you want, but the fact is, you're much more likely to make a house payment if not making it means you'll lose your house. So it's kind of a forced savings mechanism. Seems to work really well, especially for Americans, where we are kind of always over consuming. Even more than most other places around the world. So I'd say those two things are kind of the traditional ones. Max out your tax advantage retirement savings, buy a house because otherwise you short housing. And then I think Bitcoin is that thing you want to think about as the third leg of the stool. You want to be accumulating a little bit of Bitcoin every week or every month, set it and forget it, swan and chill, as we like to say, and just make sure you're building yourself a nice pile of sats.
And when you first got into crypto, you set up trading alerts on mobile portfolio tracking apps like Blockfolio and Delta. By contrast, some say dollar cost averaging offers a way to invest in Bitcoin or another crypto currency and still have a life. So we all want a life, Cory.
We do.
And dollar cost averaging could,
crypto traders
let you.
I'm sorry, Christine. Go.
Swan and chill, or chill and swan. I don't know what you said, but it sounded cool.
Swan and chill. Swan and chill.
Swan and chill.
Got it. Yeah, you don't want to be that guy that has the family's upstairs and you've got just the green screens glowing on your face at 1 a.m. because some altcoin is crashing or your buddy told you to buy this.
We don't want to be that
dog
person.
Coin or something. You don't want to be that guy.
All right. But switching gears, actually, someone who I do know is that person is SBF. And he's calling for a regulatory framework for crypto. And Sam Bankman-Fried, the CEO of FTX, and he addressed some backlash on crypto Twitter and revised his crypto standards proposal. And I know you have strong thoughts on SBF, but I would love to hear what constructive criticism you have on his proposals.
I propose that he start wearing pants, first of all. That's probably the key proposal.
Cory,
no, I mean, honestly, I don't really care. I don't really care that much about this stuff because at the end of the day, every single one of these altcoins is not only significantly more centralized than Bitcoin, but by nature becomes more centralized over time. So there's zero chance that they will stay out of the realm of politicians and banks. Like that's where they live. And if they want to survive, if a crypto casino like FTX wants to survive, it must successfully perform regulatory capture. It can't exist and be profitable and be worth anything without co-opting governments essentially and buying their way to survival. So it's not surprising that he's donating millions and millions of dollars to political campaigns and getting his lawyers in DC as much as possible and trying to shape regulations to his favor, and pretending to be this altruistic sort of backstop for all these shady businesses that should just be allowed to die because they were just horrible ideas in the first place. So no, I don't really trust him at all. And I think people should take everything that he says with a barrel of salt and probably just toss it out.
Is that just because he's a centralized exchange, or are you for
I'm a
DeFi
centralized
exchanges?
exchange.
What's
no,
that?
I mean Swan is.
Oh yeah,
Swan
that's right. You're a centralized exchange
as well. Yeah, exactly. It's not about that. Yeah, no, it's just the disingenuousness and the constant lying. It's just hilarious to me.
All right, you called it on many people.
On for weak opinions. Did you have me on for weak opinions?
We wanted you to educate, Cory. We know that you're good at that as well. Okay, we're gonna end it there before it gets too spicy.
So somebody to bring it back, because you did mention, Alameda and Jump and some of these guys, prop trading firms in crypto, and if you've got Point72 or SAC or any of these guys that kind of know what they're doing, they have a lot of money for systems, for algorithms, for these black box trading things. They make fun of day traders and call them click traders. And when I realized that I was being made fun of by these people, that was part of the reason that I completely stopped trying to trade this stuff back in 2018, 2017. And a click trader is someone who actually uses their fingers to enter a trade with a keyboard or a mouse. And that's kind of a term of derogation for people that actually make money trading cryptos. They make fun of the click traders because that's whose money they're taking. It's a zero-sum game. It's even worse than zero-sum because so much of the pie is actually taken by the insiders and so it never even trades on the market. It's just, created by the pumps before the dumps and by the VCs that get in on these projects like way earlier than it's accessible to retail. So you're already starting with only like, maybe 50% of the pie available. And even in that 50%, you're going against traders where there's probably something more like power law returns, like 1 or 2% of the people that aren't click traders taking the money from everybody else, versus like stock day trading, maybe like 20-25% of people actually do that profitably, because it's also an expanding pie in stocks. The number goes up in stocks, the number goes down in altcoins. It's all pump and dumps, and you're going against people that have a lot of advantages without regulations that you don't have as a retail trader in crypto. So it's literally way worse than a casino, 1,000 times worse than day trading stocks. Like, you're the biggest marks on the planet if you're like a retail click trader for crypto.
All right. Well, Cory,
anyway,
thank you as
but you
always.
can also just put some of your profits in Bitcoin if you make some money.